Here's an overview I want you to pay attention to. So I want you to look right here on the screen here. So we are speaking about 8615. So Form 8615. So this is actually this is about tax for certain children who have unearned income. So basically what you want to do here is you want to put your child's name showed on return, and then you want to put the child's social security number. And so this is basically, so everything revolves around the child here. And for line A, you have to put the parent's name. So here we're speaking about the first name, last name, and the parent's social. And one thing I want to say here is that you want to be very clear. You have to be very correct here, because the IRS takes this form as a legal form, and it has legal force in a court of law. And on line C here, you have to put the parent's filing status. So for our hypothetical case here, we have married filing jointly. This is kind of good. And so part 1 here, you put the child's net unearned income. So we're speaking about, so line 1, you put the child's unearned income. So we put 10 grand. And if the child is not itemized, you have to put you have to fill out the form for like Schedule A, and otherwise it's 2,500. And so line 3, if you follow the math, it's 7,500. So if you subtract 2,500 from 10,000, you have 7,500. And line 4, you have to enter the child's taxable income from Form 1040 or 1040 NR. And this is on line 15. So here we have 15,000. Again, here we are using hypothetical numbers, but you have to put numbers that really apply to your specific situation. And line 5, if you follow the math that the IRS actually has put here, if you subtract 7,500 from 15,000, we have 7,500. And part 2 here, so we have a tentative tax based on the tax rate of the parents. So here you have to put the parents' taxable income on line 6, and we put 100 grand. And if you follow the math that the IRS wants you to follow, on line 8 you have 107,500, and so line 9 you have to put 27,000. Again, everything relates to Schedule D. Again, this number is hypothetical, but then line 10 here you have to follow the math, and we get 22,500. And line 11 here we have 5,000. One thing I want to say here is that if you add lines 5 and 7, you have 12,500, and if you line 13, if you follow the math, you have 3,000. One thing I want to show you real quick here is the taxable income worksheet for like line 5 for Schedule J, and I also want to show you here qualified dividends and capital gains tax worksheet line 8. Again, this will have to relate to your specific tax situation. If you have any questions, let us know in the comment section and we'll get back to you. Not a problem. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. And let's talk about part 3 here. So part 3, we are speaking about the child's tax. So here we put on line 14, we have 7,500. And on line 15, you have to actually check the box that really, if the box that applies to your situation. And line 15, we have $1,500. And so when you add line 15 and 13, you have 4,500. And again, this is pretty straightforward. This is the method you have to follow, and follow the instructions that the IRS has on this form. For line 17, you have to actually enter the tax on the amount of line 4 rather, based on the child's filing status. So in our case here, it's 1,000, and for line 18 here, we have 4,500, because here you have to put the larger of line 16 or line 17. So the larger of line 16. So line 16 was 4,500, and line 17 was 1,000. So the larger here is 4,500. So I'm showing you right now on the screen here, so you have a clear idea what I'm talking about here. So we are speaking about the Form 1040, and it's one of those things where we're speaking about you actually transferring data from your Form 8615 to your Form 1040. One thing I want to say here is that just make sure that your tax situation, your tax filing situation, really applies to the specific form you are filing. So in other words, if you're filing, let's say, head of household, that all the data that you're supplying to the IRS matches, all that data matches actually your filing status. If you're filing jointly, it has to match. If you're filing single, it has to match. And also, it's important to make sure that you have proper documentation, just in case the IRS just want to double check a little bit on those on some of your claims. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8615. Let me give you the approach you need to really follow here when it comes to Form 8615. It's important to really understand that everything revolves around your specific tax situation, okay? Typically, children are in a lower tax bracket than their parents, and the reason for this is quite simple. Most children don't have that much income, and for those that do, they rarely earn more than their parents, right? At least that's what you want. So some parents have attempted to take advantage of this by putting investments in their children's names, hoping that any investment profits will be taxed at the child's lower rate. So, in response, the federal government changed the tax treatment of children's unearned income by taxing it at the parent's tax rate. And so, Form 8615 is used to make the child's tax calculations for this income. And so, when we talk about unearned income, we're speaking about something very specific. Unearned income is actually income gained from a source other than unemployment, work, or other business activity. And so money from work, by contrast, is earned income. Unearned income includes all forms of investment income, including interest, dividends, most rent, and royalty income. It also includes capital gains, the profit you make when you sell something for more than what you paid for it. Some people might use the term passive income, but it's not the same thing. Unearned income is a lot more different. One thing I want to say here is that when we talk about unearned income, and in the context of filing, like taxing it at the parent's rate, not at the child's rate, it's important to really understand that you have different categories of assets here, and different categories of assets, and the laws are changing all the time. So when we talk about, for instance, when we talk about, let's say, if you have stocks or bonds, for instance, the treatment is kind of different if you are invested. If the child had what we call alternative investments, alts, okay, let's say jewelry or arts, or or what have you. But the thing is that the bottom line here is that you want to make sure that you will follow the tax rules at the time when you file it, because those regulations are changing all the time. And you also have to, very important, I had to mention that you have to follow the tax laws at the state level, because things happen at the federal level. This conversation 8615 only applies to the federal forms, but you have to make sure that the state levels is also taken care of for all the situations that are applicable. So let's talk about eligibility here. So who is required to file Form 8615? Well, for this year, Form 8615 needs to be filed if all of the following conditions apply. We're going to put this on the screen so everything is clear for all our viewers. So the child has more than $2,500 in unearned income. The child is required to file a tax return. The child does not file a joint tax return with a spouse. At least one of the child's parents is alive. And the child is within certain age limits. So those 5 conditions must all apply. Again, the focus here is all of the following conditions have to apply. We're going to put this on the screen. We're going to leave this for a few seconds so it's clear enough. If you do not have all the 5 conditions, then this will not work for you. All the 5 conditions must actually apply. So for tax purposes, the child's age is the age on December 31st. And the child is required to file the form if any of these conditions apply. The child is under 18 at the end of the year. The child is under 18 years old and does not have earned income that is more than half of the child support for the year. Or the child is a full-time student aged 19 to 23 and does not have earned income that is more than half of the child support. So you have a clear idea here about the segregation of categories here. One thing I want to say here is that, again, these rules are only the rules that are really applicable at the federal level. You still want to make sure that you have to monitor the rules, or at least abide by the rules at the state level, to make sure that you are compliant with all regulations. And one thing I need to say here is that we are talking about earned income versus unearned income, and it's one of those things where you have to see what really works for you. One thing I need to say is that whatever category you find yourself in, make sure you have the proper documentation to trace everything. To trace everything, I mean everything, every single amount, you have to be able to trace it so that if the IRS were to ask questions about something, you are able to provide documentation real fast. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8615. Now let's talk about the treatment of unearned income. So this is one of those things where you have to have a clear idea what we're talking about. So when we talk about unearned income, you need to understand this year, the first 1,250 to 1,250 worth of your child's unearned income is tax-free. So 1,250. So the next 1,250 is taxed at the child's income tax rate for this year. Any unearned income above 2,500, however, is taxed at the marginal rate of the parents. That is usually higher than the child's rate. So this tax treatment has gained the nickname the Kiddie tax. So calculating how much tax applies to a child's income is actually the purpose of 8615 when you really think about it. And it's one of those things where you have to really understand that this amount, I'm telling you, they change all the time. So for next year, for instance, this amounts are increased such that the first $1,300 of a child's unearned income is tax-free. The next $1,300 is taxed at the child's tax rate and amounts, and over 2,600, those are taxed at the parent's tax rate. Okay, and there is some kind of granularity on the form itself. So when you file the form, you need to provide the child's name and social security number, and the name and social security number of a parent, as well as which filing status the parent is using, such as single, joint, or married, filing separately. And you have to understand that the form itself has several categories, and the form has 3 parts. Part 1 identifies the child's net unearned income and how much of it is subject to the Kiddie tax. As you probably saw when we did the hypothetical scenario a little earlier. And part 2 actually calculates the Kiddie tax based on the parent's tax rate. So your tax rate, if you remember that when I showed you, basically my tax rate was around 25%, for instance. And part 3 actually calculates the child's tax that is used on the child's Form 1040. But everything has to be clear in terms of which category applies to which specific situation. One thing I want to say here is that when we talk about, I think I said this to you before, we have to make sure that you have all the documentation that is needed, so that if the IRS were to ask you questions, you can provide the documentation real fast. Now let's talk about knowing when to file Form 8615. I mean, it's one of those things where there are situations where you have to have a clear idea of what really works for you. And so basically, unearned income, again, when we talk about unearned income, we're speaking about what some people call passive income. I just want to clarify that because passive income is a lot easier for certain folks to understand it than unearned income. So Form 8615 is actually used to calculate taxes on certain children's unearned income. Not all of them, certain. But the thing is that because the rules are changing all the time, you have to make sure that you actually stay updated on those rules. So unearned income typically refers to investment income, such as interest, dividends, capital gains, and rental income. And it's one of those things where it's the type of income that you can actually trace in accounts. And however, for this particular tax, a larger definition is utilized for unearned income, and more sources of income in the child's name are considered. So these sources may include unemployment compensation, IRA and other retirement plan distributions, scholarship and grant payments, royalty income, and taxable portions of Social Security benefits. And so if a child is under 18 and received more than $2,500 of non-wage income, Form 8615 may be required. And this situation is most common with parents who have set up savings and investment accounts for their children and have them named as co-owners, but also can arise from the child's being named in a will, recipients of scholarship funds, and being named as a beneficiary on an account while still a minor. And this is why if you actually are naming your child in certain investment transactions, you have to keep track of those transactions because some of those appointments or some of those appointments, they do trigger tax consequences. And the IRS is actually, I mean, the burden is on you, the parents, to actually track your tax obligations and to make sure that you're filing the proper forms with the IRS at year end. And one thing I need to say here is that the child, if the child is older than 18, the child also has a responsibility to file certain taxes with certain tax forms with the IRS every single year. Now let's talk about when is a Form 8615 required. Well, it really depends on the situation here. So Form 8615 must be filed with the child tax return if any of the following apply. So let's say the child is required to file a tax return for any reason. The child's tax return is not a joint one. So this is one of those things where you have to make sure that you do not have a joint one. At least one of the child's parents is still living. I've said this before, but I want to insist on that because if they're both dead, then this Form 8615 actually doesn't apply anymore. There has to be one living parent, and the child has more than 2,500 in unearned income for the year. It has to be for the year, not for 6 months or 9 months, for the full year. And then it's one of those things where you have to constantly track the unearned income that the child has. Again, those amounts. This amount of 2,500 that I'm telling you, this amount is changing every single year. So next year, for instance, instead of 2,500, we are talking about 2,600. And so the child also must be under 18, and as of the end of the tax year, or let's say be a full-time student between the ages of 19 to 24, and not have earned at least 50% of their own support. And it's one of those things where you have to understand that you can really apply, and you can actually apply you can file the Form 8615 and apply for the appropriate tax credits or tax deductions. And if the only unearned income the child is reporting is comprised of interest, dividends, and or Alaska Permanent Funds dividends of less than 12,500, the parents can make an election to file Form 8814 and claim this income as their own. And while the child will not need to file a tax return, and subsequently will not need to file Form 8615, it may result in higher taxes for the parents and potentially negate certain tax benefits, such as, let's say, the earned income tax credits, or trigger the net investment income tax, since those figures are based on total investment income. So the things are really changing all the time, but you have to see what really works for you. But I want to close to this conversation by insisting once again that, insisting on the fact that we have spoken about how things actually shape up at the federal level. But if you are in a state that really requires you to actually abide by certain, I would say, specific tax regulations, you want to actually have you want to contact the state tax authorities to have a clear idea what the rules are in your state for this particular year. Or you can just let us know in the comment section. You can tell us, where you are at, your city and state, and ask your questions. And our team members will provide you with an answer, and you can take that answer to actually see whether or not you should be filing Form 8615 or not. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about Form 8615. So I gave you the overview, the approach, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.